Hello, Empower Nation. Welcome to Empower Her Money podcast. I am your host, Angela Duncan, speaker, best-selling author, serial entrepreneur doing all things money and business. Today's episode is sponsored by freemoneytipsbook.com, freemoneytipsbook.com. Head over there, get your free ebook to get you started on your financial journey. On today's episode, I am interviewing Julie Roy, and we are talking about buying commercial real estate, not only for your cash flow today, but as a retirement plan as well. Hello, Julie. Welcome to Empower Her Money podcast. How are you?
I'm awesome. Thanks so much for having me today.
Yeah, thanks for joining. I would love for you to start with your story, kind of your journey and how you got to what you're doing now.
Sure. Okay. It's a little long because I'm almost 50. So it's been a while. So I'll give you a long and short. I came from a very, middle to, I would say, working class family. My mom was a single mom. She worked 3 jobs. We had a lot of involvement with our grandparents who helped raise us. I'm Italian, so it's a very family driven environment. So getting to the point where I started a business, basically I was in law school because, when you're Italian, you're going to be a doctor or a lawyer. And so I had this whole plan of W-2ing, just a high level career. And that's how I was going to get out of this, level up. And so I started school, university. I was the first one to go to university in our family. So I started to go through the motions, and I moved away to Europe for a little bit in between there, played some soccer, came back, and just like really kind of found, myself and my passion. As a little girl, I was always babysitting the whole block. Like I was always, taking care of kids, or just that was kind of my jam. I always like was the teacher in the group, you know what I mean? Like pretending you're a teacher. So long story short, I think in my heart of hearts, that was my calling, but I was really fighting it, and then I came back from Europe, and during university, I was working at a Montessori preschool before and after school. And so I just fell in love with the method and just thought, wow, if I ever have kids, I'm definitely putting them in Montessori. It's incredible. I just love how they follow the child. It's awesome. So I was like, that's just back of my mind at one point. Then I fell in love with it so much. I started doing my training. I started teaching and assisting, and then teaching, and then taking all the trainings. And then I ended up after that opening a small school, firstly in the basement of my mom's house, which she was like, you got to get this out of here. And then on my own, I found I was looking for money because obviously I didn't have enough money to open my own business. And I wanted to do it on my own, and so at the time I was dating my husband, who was obviously my boyfriend then. And I found this article in the paper that said, if you need cash, call Malcolm Banks at da, 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 da. I was like, I'm calling Malcolm. Like, I'm just going to get this cash and do this on my own. So I told my then boyfriend, Bo, and I was like, okay, and he's like, you're not going by yourself. Like, I'll come with you. Let's figure this out. So we went, it was downtown, back alley, burgundy door, knocked on the door. He literally was sitting at the table, was like, are you here for the money? Like, it's literally a crazy story. We borrowed $25,000 from Malcolm Banks at 19%. I wouldn't suggest this is the way you start, but my point in this is you don't have to have the resources. Sometimes you have to start without the resources, and you have to build the plane while flying it, right? I mean, really, this is sort of what we did. Believing in yourself the entire time, because obviously this is what, at the end of the day, this is all on you. And before we left that office, a little tidbit, Malcolm said to Bo, I hope you love this girl, because he had to sign. I couldn't even sign because I didn't have enough credit.
Oh, okay. Wow.
Bo signed for the credit. And he was like, I hope you love this girl, because if not, we're going to come and find you, basically. And I was like, oh my God. So when I left that office, I was like, okay, everything's figure outable. I truly believe in that. And the second thing I said to myself is, well, there is no option for failure here. So if you have no option for failure, success is the only option. You really quickly find out how to make shit work. So basically started the school in the basement of a church, found a lease, signed, did some zoning requirements, went through city council, a lot of learning, right? A lot of learning. Opened the school, quickly grew the schools to other locations, started buying the real estate. In that specific instance, we were bought out in 2011 by a private equity company. I retired, opened long-term care, did a bunch of stuff in between that made me really sad, went back to childcare, but I had a non-compete in all of Canada. My husband's Hawaiian, I'm Canadian, the kids are dual. So I ended up looking around Michigan because we're on the border in Canada of Michigan. So I'm like, we could easily commute, Meanwhile, my husband's running a practice. He's a psychologist. He has a really busy, huge practice. So, we have 4 kids in the mix. So I've had 4 kids while adding all these schools. And then found this broker. I had a lot of brokers looking for deals that had a specific requirement for schools. And so this deal came across my desk for some schools in Omaha, Nebraska. I had no idea where that was. For 6 months, we called it Oklahoma because we had no idea. So I commuted we bought them, long story short. I commuted from Canada to Omaha for 12 to 18 months, back and forth, every Monday, coming back every Thursday with 4 kids. Again, this was like a situation where a failure wasn't an option. I put a lot of money in to buy the schools and I had a plan. So long story short, our plan was to stay there for 10 years, move our family over, Bo retire. All that happened. We moved over in 2019. Except the 10-year plan ended up being 3 years. And we are again scaled the schools in 1/3 of the time, right? Scaled the schools to 10 locations, bought all the real estate. And again, private equity approached us. We sold the businesses to private equity. And what I did was, because we always kept buying the real estate as much as we could, we ended up partnering that deal with a REIT, selling all the real estate to the REIT with 15-year triple net leases in place with corporate tenants, which then kind of really pushed my love of triple net. I mean, I always was a sale leaseback owner. So we always had a triple net lease in place as a holding company to our schools. But this kind of catapulted, obviously, our huge real estate kind of empire now. So long story short, that is the very quick synopsis. I don't know if it was super quick, but it's our story.
Yeah. And that's interesting too, because, I'm one of my first careers, I worked as a team as a financial advisor in private equity. And to think that, private equity buys schools too. I actually wasn't aware of that. So that I definitely learned something new there.
Sorry about that, Zoom.
Oh, that's okay. It sounded like Siri popped in for a second, but I'm on a laptop.
Oh,
so
no, I don't have her on my computer, so I'm not sure what's going on. But yeah, so basically that's the thing to sell, being in private equity, selling once is kind of like, okay, wow. But selling twice to private equity and also compressing the timeline from, 10 years. The first sale was 2001 to 2011 to now 2019 to 2021 was the sale. So just figuring out all the things we did wrong in the first 10 years, or what took us so long, organically to build wealth, to mitigate taxes, all the things we didn't know in that first 10-year episode or go around. We really spent a lot of time and money on mentorship for that compression of time in the second sale. I put a lot more time into mentorship for myself as an owner, which we often, I feel like we often have the ownership, like owners always have their mentorship on the background because you're always pushing like in our field for sure, professional development and making sure the schools are doing well and the kids and the quality. And so for us, a big change in mindset was investing in ourselves so we could invest in others. And I think that was really helpful, to anyone listening here that has a small business that wants to scale. I really do feel like there's definite components in scaling that are necessary for platform scaling or for platform exits.
Yeah. And the way that you separated that. So if I'm understanding this correctly, the private equity bought the business side of it, but the real estate, you sold it separately. So that's, like double essentially what you were.
Yeah. So I basically doubled my equity multiple because now I had this super valuable real estate that had not just brick and mortar. I had 15-year triple net leases from a corporate guarantee that then the NOI is a game changer, right? Like our net operating income on those buildings, now we're just not a brick and mortar that you have to find a tenant for. The tenant's already substitute, like the tenant is stable, they're already in there, they're situated, they're not moving, families and kids are going there. So a 10 or 15-year lease is no big deal for those companies to sign, because schools are challenging because you have so many specifications. You're not just going to move them, right? Like it's just too expensive. So REITs love that type of stability, especially if, like our product had a really good name. Our brand was super strong in the community. I bought from an 87-year-old. So her brand was in the community for 40 some years. Like there's definitely steps to take in managing risk when doing this type of thing. But yeah, I mean, the multiple we made on the first set of schools, it actually was 12 times on the second set. So, I mean, the exit was just that much more grand in the second sale, due to a whole bunch of things I didn't know in the first sale. So
Yeah,
yes,
you learn though. And
someone was like,
implemented.
Julie needs another try at this. So, I mean, the first one was good too. I'm not complaining. It was just a very different level on the second one,
Yeah. And you kind of stumbled upon learning about triple net leases because you wanted to open a school. You never really thought that this could be your trajectory, right?
Absolutely not. Like I was thinking I was going to rent, and at some point I'd buy the real estate, right? Not knowing, like, we have always had really awesome people around us that have helped us. And so I really feel like, for me, generosity breeds abundance. I say this all the time. And so does adversity. I think adversity and generosity breed abundance. But my adversity from life situations, whatever, has definitely made me a super obsessed with success type of girl. But the generosity in my heart came from my parents, like my mom, my grandma. They're all very generous people. And I think we've always been give back people. And so I feel like we've been blessed because of that, because we've always tried to give back a portion of our business, or, make sure that everyone around us has been able to be blessed along with us, which I don't see a lot of entrepreneurs having that mindset. And it's a game changer. If you help other people, you are just helped, so.
Yeah, I definitely feel that. I've met you in person and had the opportunity to be in some of the same circles, and I do feel your heart. And so I think that's a huge thing, is, not being greedy when we're learning and when we're acquiring. It's the abundance part of it, and we want to share and help other people to get to those levels too. So that's definitely something I've felt and I've witnessed from you, and I'm very grateful for that too.
Well, thank you. But yeah, for us, it's definitely, this next half of life is really based on, what can we do to help people? What do we wish we had during those times? What can we put in place to help people avoid the mistakes, the minutia, the runarounds, the really challenging pieces of business, like securing financing, right? The best ways to do that, the ways to not make mistakes with money. I mean, it's huge, right? Those are things that can set you back years. And they did for us sometimes, right? Sometimes we did stuff and we're like, oh, that's probably not the best idea. So having done a lot of mistakes, and having learned a lot of lessons, we always say in our family, it's not a failure unless you quit. So failures are really just lessons, right? And so we talk a lot about the lessons we've learned along the way, and those lessons have literally catapulted our growth now, right? And so again, adversity, generosity, these are just pieces that they're non-negotiables with us.
Good. Yeah, that's awesome. So talk about why you kind of now choose triple net versus, there's a lot of people that are talking about multifamily apartment buildings. Why the triple net space? What is that? Why is it different and good for you?
Yeah, let me tell you a little bit about our journey. So when we sold the schools, we were actually, extremely comfortable in our lifestyle, right? We had a very good active living coming in, active income for an active living. Basically, we had a certain sense of freedom financially because we had a very stabilized monthly recurring revenue, right? From the businesses. Schools have tuition, that kids are there for a year. It's very stabilized for expenses, costs, right? And that is my specialty. So I know like where I'm supposed to be at percentage wise to revenue. Like it was very easy and comfortable. When we sold the second time, I felt like, oh my gosh, before we sell, we need to start with the end in mind. And we had a whole program that we basically did working backwards to create passive income to replace the active income that we would be losing. So I was like, okay, it doesn't matter the number we sell for, because you can sell for all you want. If your living has to change or you're not ready to accept the changes in your lifestyle, then you have to make sure what you're selling for is going to replace that. So I was like, we can't replace our income unless we have this much coming in passively. And I'm not willing to change our lifestyle. I love to travel. We have huge family mission, vision, values, and goals. We will be finishing the 7 continents with our kids this year in December. Like we are really focused and hyper focused on our success and goals. And so we just weren't going to, this was non-negotiable, another non-negotiable for us. So what we did was we started with the end in mind. I was like, this is what we need passively to replace the active income. Obviously, we had a large capital event that made that possible. But the first time we were not smart about it. We were not smart about repurposing the money, reinvesting, doing a lot of passive income opportunities. We just didn't know enough. And also in Canada, there isn't the opportunity there is in the United States for things like depreciation, reinvestments, passive income. There's just not the opportunity. So having been here, we put ourselves in the right rooms. My biggest issue was we had a capital gains tax, which was much harder to eradicate, but ongoing, we're going to have this, we needed this active income or this passive income to replace the active. So what happened was we bought a huge portfolio with the real estate side of the sale. We took all that money and redeployed it, 1031'd it to push those taxes down the road. We redeployed it all into triple net because it was the most reasonable, reliable, and stable way for us to create monthly recurring revenue for our family. So we took that, say we had 10 locations, each location bought 1 or 2 new places like Starbucks, like CVS, like O'Reilly's, like whatever. So we have a large triple net corporate portfolio we own ourselves, which every month our bank account fills up to whatever we need it to fill up to. And that is a really good stabilized monthly recurring revenue for us. We also had a lot of equity. So that made it really nice because, we have this kind of consistent income. So that was the triple net side. Well, what happened was first year we get all this money. It's great, right? We're getting all this money in our bank account. We're spending like we're normally spending, but now we don't have 10 schools to write off all these taxes and we don't have all this, all this active business. So fourth quarter meeting with our accountant, he's like, okay, you're going to pay just over, 500,000. And I was like, what? We are not prepared for this. Like, what do you mean? This is going to be a yearly thing. So we started to look around quickly for ways to eradicate the tax that we needed to eradicate from whatever was left that we couldn't erase, which was a very high number for us. And I wasn't to give that to the government. Honestly, that I was like, this is hard-earned money. We've worked so many years, 28 years in childcare. Like we are not giving this all away. We have to figure out a way. And so, all the regular answers were, well, I'm sorry, like it just is what it is. Like you should be happy you're paying taxes. And I was like,
no,
paying taxes. Got in the right rooms with people. My accountant was like, hey, let's, here's 3 things you can do. You can invest in agriculture. I was like, oh my gosh, like I can't even keep plants alive. Oil and gas, which at the time, like I really wasn't interested in because there is some risks in oil and gas investments. And I was like, oh, I just don't want to be super risky, but I'd rather be risky than pay the government. I was still there. And then the last thing is, or you could own, multifamily apartments. And I was like, oh, tenants, toilets, trash. No, please, dear Lord. Like, I don't think that's, so I was like, I really don't know what to do. And he's like, well, you don't have to be the active person in the investment, in the multifamily. And I was like, well, tell me more. So then we started learning about obviously being an LP or a passive investor. So initially that's how we started our multifamily portion of our portfolio. And then, so that helped us. We actually eradicated taxes, not only for that year, but we actually have eradicated also for this year. And we still have a large bonus still for next year. And this year we've done the same. So I think we'll keep passing those savings for a few years. So basically we have a triad formula. We invest in triple net for cash flow. for us to live. We still have 4 kids. We have 2 kids in college. We have 2 kids at home. We love to travel, right? So I'm not willing to take a downside on that yet. We're still young enough where we want to enjoy that income. My second part of the portfolio is the multifamily to eradicate any of the income coming from the triple net side. And then the third part of the portfolio we dabble in is storage and industrial. That has a longer term hold, a higher IRR, or a higher return on your investment, but there is some more risk. And so I don't want a large portfolio. I don't want a large part of my portfolio based on that yet, because I'm not at the point where I can lose a lot of that triple net income, because we really appreciate the lifestyle, the travel, college payments, all the things, right? So that's really what we did. We were really super intentional about our money from day one, especially after this sale particularly. And look at guys, like, I'm not going to sit here and preach that this was easy, like, at all. Yeah. And 2, I'm also going to tell you, we made all the mistakes the first time. We bought Ferraris and Porsches and GTRs and watches and purses and Louis and Louboutins. Like, girls, I'm not telling you that that's not what happens. We went through that, but I quickly realized all those things were liabilities. It was not bringing me joy. At the end of the day, it was great for a minute, but it wasn't lasting joy. And 2, it really didn't produce any income for us. So then once we started really to understand the idea of creating legacy wealth for our family and our kids, and putting the money in assets that really just created cash flow for us, or created returns on investment, which now we call our return on life, because it really is what we're using the cash for. It really just changed our mindset. And I purged a lot of those intangible liabilities, and I don't miss any of it. We have simple cars. My husband has kind of a nice one because he loves cars and watches, but in general, we have really, I would say, from 90% or something to like 10%, and we only buy that stuff now with passive income, which is also a game changer, because we're not using our savings to buy that stuff. So that's a very long answer again to your question, but there's all
you're living life. You're living life. So you figured out in the real estate investing world how to create a paycheck, how to create your retirement, and how to create growth. So different avenues for different purposes. And you shared all of those nuggets on how you've accomplished those. So, and you're right, like, the stuff you can't take it with you. It's the memories with your kids and the traveling with your husband that is just huge. Like, otherwise, why are we doing what we're doing if we're not enjoying it too?
That's what it came down to. Like, I think it's age too, right? You kind of go through stages in life where you mature as a human. And I think the 2 things that we always say are, like, we want to create a legacy wealth. We want to create legacy wealth for us and our family and their families, and continued on. So teaching our kids about legacy wealth and what we're doing is so important to us too. It's integral, because if you know and have legacy wealth and your kids have no idea about what that looks like or why, they're going to lose it, right? So it's really, really important to put time in. We've done a ton of Grant Cardone conferences. We've sent them to all the apartment complexes conferences. We've sent them to financial, whatever days, like, where they learn financial stuff. They don't learn this stuff in school, guys. Like, unfortunately, you have to take it on as a parent. If you do have the opportunity to create legacy wealth, you really need to make sure to save it, to keep it, right? Just like, you want to keep your money. It's like keeping your money long-term. So so we do put a lot of time in for that. And like you said, for us, the other thing is experiences with our kids, like doing 7 continents with your kids. Man, some of those times were long and tough, but we did them. And, they always complain, teenagers complain about everything, but they complain about, oh, we're missing this and that because we travel. And then every single time there's a story, it's about travel. So we know that they really do love it down deep, but and just the opportunity to create those memories, like, when you're gone, that's all they're going to have.
Yeah. Yeah. And I love that you teach it too, because you're right. The school system definitely fails in that respect. So whatever level of success that someone has, they should always be teaching their children and how to invest and how to create income and find their passion and what do they want to do in life. And then just bringing them along in that journey and being part of it, and then watching them grow too. My daughter's 20. She's in college. She's a marketing major. And I know that she's launching her own company. And I'm there for when she has questions, because, she's still at the age where I don't know everything. But
Or you don't know anything.
yeah.
I have that too. Yes.
Yeah. Yeah. But just being part of that journey and watching them grow is so fulfilling as a parent too. So that's awesome. All right. So I'm going to switch channels here as we start to wrap up the podcast. You know, I want to be respectful of your time as well. But if you could pick a super talent or a superpower that you already don't have, what would you pick and why?
I don't have a lot of them. And I would have to say, I would love the superpower of healing.
Hmm.
If I could heal sickness, sadness, all the things in the world that we have no control over, if I could heal that for people, I think that would be my greatest gift.
Oh, that's awesome. All right. So I know you wrote a book recently too with you and your husband. Tell me about the book and why you decided you wanted to write a book.
Yeah, so we initially did just a really short collab book on investing in real estate because we didn't know the things we didn't know. And I feel like everyone should have access to that information. The book I'm writing now, which will be coming out hopefully soon, we're in editing. So that's always fun. It's really about our life and like where we came from, how money trauma is built, how you need to go through journeys to understand and learn about business, money, family wealth, legacy, all the things we talked about, honestly, today. It just really delineates a path for folks. It has some tangibles too. Like the book is kind of like, it's based on all the things we talked about, but at the end of each chapter there's like questions for reflection and like what do you think, you know, caused money trauma in your life and how can we fix that now, and how are your thoughts around money, because unfortunately a lot of the money mindset we obtain comes from growing up in, you know, scarcity, abundance. Like there's a lot of different things that that just, you know, are around us as we grow up, even conversations, right? And so having the ability to move past that and find out really what the root is of your money blockage, you're able to manifest like a very different lifestyle through a really concerted, intentional approach. And that's really what the book is about. It's hopefully going to help, you know, folks pick apart their own situations and find the holes. And also just, I hope it's inspirational, to be honest. You know, I didn't have anything that anyone else on here doesn't have, right? I started in the same, if not worse, probably than most folks listening. And there wasn't one thing that was a flip the switch success maker like people think. You know, lots of folks will say to me, well, Julie, you know, what was the one thing you did? Well, it was about a million things we did consistently for a numerous number of years. So yeah, it really just hopefully will help folks do the same.
Perfect. So. Awesome. Julie, well, I appreciate your time today. If our listeners want to get in touch with you, what's the best way to reach you?
Yeah, so we're actually rebranding our whole website at this time, so it's a little bit challenging. But I'm on Instagram as @theJulieRoy. We are on Facebook as Investing with the Roys. It's a private group, but we do let in pretty much everyone as long as you're not crazy. And then I'm just Julie Roy on Facebook, and we're actually just gonna amalgamate those two Facebook groups soon. So we are delineating our whatever our reach. So yeah, so that's kind of where we are. And I have a new website that is going to be ready on Monday, but it will be also thejulieroy.com. We're just moving our branding right now. So yeah, so there's lots of things going on, hopefully a book tour next year and lots of things coming up with, we are running a Wealth Masters business mastery course / I guess, mindset group or mastermind group. That'll be quarterly. It's for really business owners of 1 million or plus in revenue who want to scale for platform growth or scale for exit and create legacy wealth. So basically showing you what we did in a more intimate environment. But other than that, that's sort of what we're up to now. And we're obviously always doing deals, triple net deals. And we did one multifamily this year. There's a whole other reason for that, which we can talk about on another podcast. But yeah, so that's us in a nutshell.
Perfect. Again, thank you so much for your time today, Julie. That wraps up another episode of Empower Her Money podcast. Make sure that you are taking the tips and putting them into action. Keep learning. And if you want to know more about investing in all avenues of real estate, definitely reach out to Julie. And she's an amazing mentor as well. So thank you.
Thank you so much for having me, and or reach out to Angela because she's awesome too.
All right. Thanks.
Thank you for tuning in to another episode of Empower Her Money podcast. Make sure you leave me a 5-star review, share this podcast, subscribe, and share the message.